Hello, everyone. Welcome to Mortgage Up with Ken and D. Yeah, so happy to be with you today. We're gonna share some valuable information with you about the market conditions, credit, and different things like that. We are excited to be with you. So we're gonna have some great information for you. Welcome, D. Thank you so much for joining me again.
Thank you so much. It's always great to be here. So good talk. Looking forward to it. Good information, right?
Absolutely.
Yep.
Absolutely.
So, Ken, right now there's a lot of talk about rates in the market right now. There's a lot of up and down, a lot of market volatility. It seems like there's something new almost every day. How is that affecting home buyers who've been waiting for rates to go down and now all of a sudden they're right back up again?
Yes, you're not the only one asking that question. Many people reach out and worried about interest rate, how
Mhm.
high it will go. And one of the things that I would tell you, whenever you have instability in the market and the world's economy,
Yes.
believe it or not, even we are far away from what happened in Iran, we are also affected by one
Yes.
of the things that we've seen over the past couple of weeks. It's an increase in interest rate.
Okay.
At the same time, there are days where the rate is pretty good, and
Mhm.
I would say that we have seen
Mhm.
a decrease by between 10 to 15% in the demand for refinance.
Okay.
People that kind of put a pause on the refinance more, but we also see the combined frenzy slow down a little bit.
Okay.
What I like I said the last time we talk about what's going on because of instability.
Yeah.
It's always like this whenever there are uncertainty. People don't know what's going to happen,
Yeah.
and
Yeah.
still we have a lot of people taking advantage of the market and still
Okay.
buying.
Okay.
And looking at the market, we're still below 2012. We're still below 2011.
Okay.
So we still have a pretty healthy market. If you on the market looking to buy, you still can get good deals at a
Okay.
good price.
Okay. That is all good news. So just as fast as rates, shot up the last week or two, do you think they're going to stay where they're at? Do you think they'll go down just as fast? What are your thoughts?
Well, I don't know for sure. The only thing I
Yeah.
can tell you is that
Yeah.
the Fed will correct based on what's going on in the market.
Okay.
And as you know, last year we had a couple rate cuts, and this year we don't
Yeah.
have any yet
Right.
because of what's going on. And I'm sure that one thing that as much I'm not a big fan of government step into what we're doing,
Yeah.
but the government, I'm hoping they
Mm-hmm.
have under
Mm-hmm.
control, but the Fed will adjust based on the situation. One thing I would tell everybody is that
Mm.
we are in a market where you still can buy and find
Okay.
a great home at a great price.
Good.
And like a lot of investors right now, they're pouring into the market. If you're looking
Okay.
for homes to fix or flip, you don't have that. You can't find those because
Mm.
investors they're still looking for homes. So
Okay.
it's not that the market is died. Oh, we're gonna have a decrease by 10, 50%
Yeah. Yeah. Yeah.
in value. That's not gonna happen.
Okay. So homes that are well priced are pretty much getting picked up still. That's
Absolutely,
what you're saying.
yes,
Okay.
yes, yes.
So if someone is waiting, what are some of the things they can be doing to work on themselves to become a better qualified borrower? Let's talk about maybe credit a little bit, the value of credit, how to prepare. So talk to us about that.
It is very important. Often
Mm-hmm.
people don't understand and or know the value of
Mm-hmm.
credit. Credit is very important.
Mm-hmm.
If you don't have cash money to buy a home and pay cash
Yeah,
in credit
absolutely.
and know how to manage your credit is very important.
Yes.
And one of the things is if you're going through tough time,
Yeah.
negotiate with your creditors, talk to them, make arrangement to make sure that you keep your credit up to date. And one thing that I've seen often, people don't even know
Mm-hmm.
their credit score.
Yeah.
Where Now, most banks they have
Mhm.
some type of service that allow you to check your score. That's not your mortgage score. I think
Mhm.
maybe
Mhm.
Federal has two score. They have your FICO as well as mortgage score.
Yeah.
I I tend to see a slight difference between the two when we pull people's credit, but
Okay.
it's always close to whatever what you see in the mortgage score. You need to know your credit score. That's
Absolutely.
number one.
Absolutely.
If you have issue with your credit, don't delay. You need to start working on that.
Mhm.
And what's going on right now will not last forever.
Correct.
And
Correct.
even this world, you still have to sleep in a place.
Mm.
You
Mhm.
still have to drive your car. Even if
Mhm.
gas is expensive, you still have to drive your car. So,
Absolutely.
and then usually people tend to put off investment in their future when
Yes.
everything seems to be
Yeah.
uncertain. That's not the best way to go about it.
Yeah.
Make sure you know your credit.
Yeah.
If
Yeah.
there's work that needs to be done, make sure you get it done.
Okay.
I'm not a big fan of those people telling you I can fix your credit in 30 to
Right.
60 days. Um, you can't dispute your way out of debt.
Right.
That's very important.
Right.
Okay. You
Right.
need to have a plan and work that plan. We're gonna have basically a guide
Okay.
available, an e-guide to show you what you can do if your credit is less than perfect,
Okay.
what you need to do to get it where it needs to be to purchase a home.
That's awesome. So a plan is always great and very valuable. And they can reach out to you directly for that?
Absolutely, yes,
Okay.
yes.
Okay. So you're saying maybe, we're not really fans of those credit repair companies, that if someone needs to work on something, they should have a conversation with someone such as yourself, a mortgage broker, a lender, and you can lead them through what action steps they need to take to get to where they need to be.
The issue is the false expectation. They're trying to tell you that we're gonna dispute everything, they're gonna remove them.
I gotcha.
Sometimes the technique they use is that if you dispute something by the
Yeah.
time for the creditor to reply to the credit bureau, if it takes them longer to verify the account, they preempt
Yes.
it and
Yes.
then go back and place it there,
Right.
back on your credit. You can't just dispute something. What I've seen with people, that especially with collection and charge off,
Mm-hmm.
there are ways you can remove them.
Mm-hmm.
There's what we call pay for dilation.
Yeah.
You can negotiate with the creditor, say, hey, I want to pay this account, oh, but I want you to delay that
Yeah.
time
Yeah. Yeah.
from my credit report.
Yeah. Yeah.
Sometime they will do that.
Okay.
Sometimes they won't. They will say, okay, we'll pay as agreed, but they're not gonna remove that. But do not waste money every month,
Good
especially
advice. Yeah.
those credit report company that want you to pay monthly fee.
Correct.
If they charge you monthly to get the work done, you're
Yeah.
gonna spend a lot of money trying
Months.
to fix your
That's right.
credit because they want to make they
Correct.
want to make their money.
The process is longer, slower, and they keep you hanging on for months, so they're continuing to bring in the income. Yeah,
Absolutely.
yeah. Okay, that's awesome. So if someone applied somewhere else and maybe we're told that they don't qualify with another lender, what can they do? Is it good to come to someone such as yourself for a second opinion?
The same way, you go to the doctor, you seek either you need to do surgery. Some people they seek
Hmm.
second opinion.
Hmm.
It's the same thing if you go somewhere and they tell you, oh, your credit is bad, you're not qualified. It's always good to seek a second opinion. I've seen many people that they would not qualify to purchase a home,
Yeah.
like one that we're closing tomorrow.
Yes,
So
yes.
she didn't even choose, like, I can't believe that
Yeah.
because when other people tell you no, usually, and that's something that I've seen,
Hmm.
um, when you have people that looking for perfect file, if the file has some work to do
Yeah.
and they don't want to take time to work on it,
Yes.
usually it's way easier to just say, hey,
We can't qualify you.
exactly.
Yeah.
So we use what we call the desktop underwriting system to get people pre-approved. All
Okay.
lenders, that's what they use.
Okay.
Often you run deal because desktop underwriting, you have refer eligible or
Mm.
ineligible.
Hmm.
So whenever you have a refer, that's a problem.
Okay. Okay.
So if it's not gonna qualify for manual underwriting,
Okay.
you have to have approved eligible.
Okay.
What I've learned over the past couple years,
Mm-hmm.
there are ways you can work around that to make sure that what the desktop underwriting system does not like is something you can legally fix,
Correct.
whether increase reserve or
Correct.
pay off debt or increase down payment. Or for the past couple files that we've done, so what have we've done, we
Mm-hmm.
instead of do 30-year mortgage, we
Mm-hmm.
did 25.
Correct.
So the borrower, even with higher debt to income ratio with the 25-year mortgage,
Correct.
we're able to approve
Yeah.
compared to 30-year mortgage, lower DTI where they are
Yeah.
prefer eligible. So it
Right.
just
Right.
depends on what the lender,
Mm-hmm.
the mortgage broker can do.
Correct.
One thing that I always tell people, when you go to a retail lender, like
Yes.
Pop
Yes.
or Nivfed,
Yes.
whatever what they have available, that's what you get.
Right.
When
Right.
you go to a mortgage broker that have access to multiple lenders,
Yep.
there are
Yep.
things that they can do that
Mm-hmm.
one lender cannot
Absolutely.
do.
Absolutely.
Absolutely.
Because you're not going to flat out deny the loan. You're going to find a solution around it within regulations. Yeah.
Absolutely,
Yeah.
yes.
To get it done. Okay. So talk to me a little bit about debt to income ratio. How does that factor in? How many credit card payments, you have per month, your car payment, all of your bills. How does that factor into how much you can qualify for in terms of a monthly mortgage?
It is very important to
Yeah.
understand debt to income ratio. You
Yeah.
have your front debt to income ratio and your back.
Yes.
Front and back end, that DTI, that's how they call it in
Yep.
language,
Yep.
mortgage industry. So your mortgage ratio is, which is the most important one, is basically the total amount that your payment for the mortgage
Okay.
compared to the income that you receive.
Bring in per month.
Yes.
Okay.
So many depends on the program,
Mm-hmm.
depends on the lender's overlay.
Mm-hmm.
You can, some of them they want low front end DTI,
Okay.
others they can do high.
Okay.
I've done one that went as high as 44%, where other
Okay.
lenders they would not do that.
Really?
So the back end DTI, it's your total debt.
Okay.
So to your income.
Mm-hmm.
FAJ allows you to go to as high as 56.99%, as long as we're below 57.
Wow.
You go with some lenders
Okay.
where others you cannot go above 50.
Okay.
So VA,
Yeah.
people can go, it just depends on the lender and what they say.
Right.
If you
Right.
have, even if you have high debt to income ratio,
Yeah.
as long as the desktop underwriting system give you an
Approval.
eligible,
Okay.
will be fine.
Okay.
But it's very important you understand, if you're making $5,000,
Mm-hmm.
your total debt cannot be
Mm-hmm.
60% of that $5,000.
That makes total
that you
sense.
bring in.
Yeah. You need to be able to afford your mortgage.
Exactly.
Yeah.
So that's one of the reasons why, if you're doing a conventional loan,
Mm-hmm.
they have lower, they
Okay.
require lower DTI.
Okay.
If you're doing USDA, same thing. They require lower debt to income ratio.
Okay.
It just depends on the programs. So one thing that I've seen, there are a couple ways you can go with the debt to income ratio.
Okay.
Whether you buy the rate down to lower the payment,
That's
or
right.
pay or debt at closing or before closing.
Okay.
You have found to do that.
Excellent.
You can use actually closing costs to help you buy down your rate to lower your debt to income ratio.
Very nice.
It's all about what you know.
Yeah.
Okay, let me put it this way: it's all about what that loan officer you're working with is willing
Right.
to do
Right.
to help you, or know what to do.
Exactly. And working with the right loan program that's right for you.
Absolutely.
You have to be able to guide and steer your clients in the right direction. Okay, awesome. So thank you so much for addressing the market right now. People are hearing so many different things on the news, and frankly, people don't know what to believe. So Ken, what would you overall like to leave us with? What are some more points you'd like for people to know?
Well, one thing I will tell you is that um, no matter what's going on,
Yeah.
you're still gonna need a place to sleep.
Correct. Correct.
Whether you rent it from somebody else, you're paying the mortgage,
Yep.
or you buy your own, you still have to do what you have to do.
Absolutely.
Okay.
Absolutely.
Because gas is expensive, you're not gonna say, I'm not buying a car. So
Correct.
if you have to buy a car, you're gonna keep buying. You the same thing for a house.
Yeah.
You're gonna continue to do what you're supposed to do, because believe it or not, even you have uncertainty, but life will continue to go.
Correct. Yeah.
You're gonna keep doing what you're supposed to do, because that's very important.
Right.
So
Right.
what I would advise people to do is
Mm.
that take a step back
Mm-hmm. Mm-hmm.
and talk to someone that can help you.
Correct.
Talk to
Correct.
don't make the decision on your own. Oh, my rent is 2,500. I'm gonna sit there and pay it.
Absolutely. Yeah. Yeah.
You know, like the young lady we're closing tomorrow,
Yes.
she was paying 25 plus $100 a month. So
Yes.
she's gonna end up paying way
On a
less than
rental.
that, and she owns her home.
A beautiful
So
4-bedroom home.
yeah, absolutely. So
Yeah.
it's not about what's going on the market. It's all about, okay, what can you do about it?
Absolutely.
So like one of the investors that I like to listen to, I don't want to name names, he said, when there is blood on the street,
Yeah.
you eat. You can say most investors, they know that.
Right.
When the market is low, this is when they buy in quantity, because they
Okay.
know whatever was going on is temporary, it's not permanent.
That's great.
And thank God, for time is not permanent. It's
That's
temporary.
it. That's it.
So
Yeah.
you might have multiple Mondays or Tuesday, but you don't have one Mondays last for
Consistently. Yes.
exactly. The market, yes, it's a little bit uh, inconsistent right now.
Yes.
However, you can still find a great home to purchase at a
Yep.
good price, especially getting closing costs to help you pay
Yeah.
buy down the interest rate to pay
Mhm.
lower interest
Mhm.
rate. Believe it or not, even with what we have right now,
Mhm.
we're way, way below
Mm.
10%. I remember the first home I had bought in 2003.
Wow.
Interest rate was 10, went at like 10.5%.
That's a huge
And
chunk.
they said it was great.
Yeah.
You know, and if you waiting for the 2.5, 2.75% interest rate that you had during COVID, I hate to deliver bad news. You might not get
It may not be coming back.
no,
Yeah.
no.
Yeah. So have a plan, stick to the plan, and think long term. That's what I'm hearing.
Absolutely.
Yep.
Absolutely. You need to have a plan.
Yeah.
So
Yeah.
here's what happened. People planning a party, they get
Mhm.
everything they need. So
Mhm.
they know the food they're gonna serve, when they're gonna start, when they're gonna finish,
Mhm.
but they don't prepare the future. They don't prepare
Correct. Yeah.
they buying their home. It's like, okay, I need a home.
Right.
I have two people I'm working with right now.
Right.
The lease will expire in May. And I said, okay,
Okay.
why did you just started the process?
Now.
Why didn't you talk to me a couple months
Correct.
ago?
Correct.
So what happened? They wait till the last minute to tackle something so important in their life, and
Mm-hmm.
when you start to guide them through the process, they really, really, really sometime having a hard time to follow the process, because they worry about, okay, am I gonna be able to finish to move to
Right.
get out of the
Right.
apartment?
Right.
What I'm gonna do when you can prepare in advance to get what you need
Correct.
to get to where you need to
So you're not panicked or stressed about
no,
timelines
no.
and lease agreements. Yeah.
Absolutely.
Yeah.
And there are plenty of programs you can take advantage of.
That's awesome.
You have
So good to hear.
down payment assistant program.
Yeah, that's right.
Great program.
That just came out. Yeah.
Exactly. We have uh, down repayable down
Mm-hmm.
payment assistant,
Mm-hmm.
forgivable down payment assistant.
Mm-hmm.
If you buy in a home in USDI, you can buy and use USD. If you're a pet, you can take advantage of the VA program to purchase.
Both a zero down payment loans.
Exactly.
Yep.
If you're a doctor, you can use the doctor's program that we have to help you. We have different programs that you can use to help you purchase your home. Just don't stay on the sideline.
Just don't wait. The best advice is to take action now. Don't wait if you don't have to. And use this time, if you're not ready yet, to prepare. Work on your credit, work on your long-term plan. Get there. So as soon as things get better again, you'll be, out the gates running.
Absolutely. You have to be prepared. You have if you don't know where you're at,
Yes.
set up an appointment.
Absolutely.
Speak with us. We'll see what we can do to guide you. And like we said the last time, we don't we build a financial profile for you to
Yes.
thank
Yeah.
you. That's the most important.
That's right. That's right.
And I spend time, whether it's on Facebook, Instagram, TikTok, or YouTube, answering questions from people all the time. You
Yes.
call me directly, I will answer your question.
That's
No
it.
matter
That's it.
what it is, if we don't have the answer, we'll find it for you.
That's it. That's it.
Because at the end of the day, we want to make sure that you make the right decision, the
That's
decision
right.
that the best for you and your family.
That's right. And it's a very low cost consultation. There's really no cost, low risk, and there's a commitment from you to help them through the process.
Absolutely.
Yeah.
And I would tell everybody and anybody,
Yeah.
if you go with, to talk to any loan officer,
Yeah.
and the what they put in front of you is basically um just programs to tell you,
Yes.
hey, we
Yes.
need to get you in to get you pre-approved, send it to an agent to purchase a home.
Mm-hmm.
Rethink that process,
Mm-hmm.
because you have to be able to understand what you're doing.
Mm-hmm.
I have a young couple that called me, and then we had a conversation. After I talked to them, even they were qualified,
Yeah.
but they were confused about the process. I explained
Correct.
it to them,
Mm-hmm.
and they're like, "This is not what my mom, my dad told me."
Right.
I said, "Well, it's either you believe me as the professional helping,
Correct.
or believe your mom, your dad that bought a house 50 years ago."
Yeah.
Either way,
Yeah.
you know, and at the end, we ended up part ways, because one thing I'm not gonna do, misleading
Correct.
anybody. That's
Correct.
that's not good for my reputation, my business. That's not we're in business for.
Correct.
We're in business to help people,
Correct.
and not helping ourselves. I'm not gonna. Parenting is gonna be easy, so we
Mm-hmm.
make sure that we get you where you need to be,
Exactly.
and then you appreciate the process.
Correct. So talk to an industry professional and expert. That's who we are, not Google and not your best friend.
Absolutely. So, in this day and age, people use ChatGPT and
Yes.
to look for loans, and I'm not saying um, it's bad.
Yeah.
However, depends on how you get your information. They can be misleading. It's better you speak to someone. So we are very grateful for you for taking time to watch us today. Hope you learned something. You can continue to send us your questions. You can follow us, or you can call us 843-900-1254. We'll be more than happy to answer any questions
Yes.
you have. You can send us private messages as well.
That's it.
We will be more than happy to answer your question. And thank you again for taking time to watch us, and have a best day.
Sounds great. Thank you so much.